Ladies and gentlemen, good day and welcome to the Schneider Electric Q4 FY22 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Ryan. A very good evening to everyone. On behalf of Elara Securities, we welcome you all for the Q4 FY22 and FY22 conference call of Schneider Electric Infrastructure Limited. I take this opportunity to welcome the management of Schneider Electric Infrastructure, represented by Mr. Sanjay Sudhakaran, Managing Director, Mr. Mayank Holani, Chief Financial Officer, and Mr. Vineet Jain, Head Investor Relations. We will begin the call with a brief overview by the management, after which the Q&A session will start. I'll now hand over the call to Mr. Sudhakaran for his opening remark. Over to you, sir.
Good afternoon, everybody. This is Sanjay Sudhakaran here. I'm the Managing Director of your company, and I welcome you this evening to have a brief overview about our organization, its performance in the Q4 of this year and the year that has gone by, and also the full year financials. So let me go directly on to slide number 3, which is page 3, which is an overview of the economy of the country and its forecasts. As you would all be reading about it at various quarters, I think the economy is poised well in India for a rebound post coming out of a very difficult period because of the COVID lockdowns and things like that. However, we must admit that we live in a very turbulent times. We have an inflationary economy which has been a result of solid demand coming back post-COVID, also due to the Ukraine war. Commodities are at all-time high and there are severe shortages in the market. All this in context of the fact that governments across the world are trying to rein in inflation. We will probably see a little bit of turbulence as we go ahead. It's very hard for us to predict, do a crystal ball gazing as to what could be in the future, but I think we must be prepared for both some headwinds as well as some tailwinds without clearly being able to predict where the overall macroeconomic situation is heading. Given all that, I would say that we have a very positive outlook as far as some of the end markets are concerned. Let me take you all to slide number 4, which is an overview of some of the end markets that we operate in. So I think on the power and grid side, we have seen various announcements by the government of India on modernizing the grid, improving the digitization in the utilities, reducing losses, and also a thrust onto solar to try and bridge the energy deficit and also hedge the economy against oil, which is a commodity that is very much under discussion right now in India. So I think there is a solid runway for growth as far as both generation as well as distribution of electricity is concerned. The overall Indian market is poised to become more and more electric and more digital. There are no two things about this, and both these provide us with a fantastic opportunity to be able to leverage in the future. There is positive momentum as far as the construction sector goes. We see that housing, the trends of housing construction, the bookings, etc., are moving in a very positive direction. So there is good demand for steel and cement. And also we have seen continued investments by some of the large companies out in building capex into minerals, minings, and metals, which is one of our core segments where we operate very well. On the other hand, we see these companies coming back with strong focus around sustainability. Sustainability means elimination of waste gases, waste gas heat recovery, digitization around the plants to conserve as well as to reuse energy, which is also a very positive sign as far as our segment and our products go. Transportation, for sure, this is not a brainer. India lags in terms of infrastructure on the transportation side. So continued investments in metros and airports are going to be there for the next 3 to 5 years. The business is a little bit cyclic when it comes to execution because of the fact that there are a number of bottlenecks around acquisition of land and things like that, which makes it a little bit difficult for the sector to move in line with announcements. However, we see a strong pipeline 2 to 3 quarters going forward. Data centers, again, on this side, I think the country is making tremendous amount of progress. We see a lot of innovation coming out from India in terms of digital payments like the UPI and the fact that data needs to reside in the country, and more adoption of digital, whether it's for entertainment or whether it's for payments or education. We see that this is the future of communication and financial instruments. So I think this sector is bound to grow as we go forward. So I think all the end markets, key end markets, are poised very strongly for growth. We see robust investments by our customers, and we are closely engaged with these customers as well. So I think it's a situation where we have headwinds in terms of inflation, in terms of interest rates, etc., which we could see in the future, but we have strong tailwinds in terms of demand. So the key thing is how do we prioritize and how do we make the best of this situation. Coming to priorities, as I would say, if we go to the next slide, which is page number 5, our priorities have not changed, and we have been consistent through these priorities in the last 4 to 5 times that we have spoken about it. The idea is to leverage digital in more and more of what we deploy with our customers, more of life cycle revenues through services to have a predictable revenue line as far as and profitability as we are concerned. Increasing our coverage because we cannot do it alone. We are building a network of strong partners, and a little bit I'll speak about this as we go forward and the traction we are building here. And also key segments, which I already spoke about, and also keeping an eye on shaping the future, that is working with the governments, etc., to see how we can build a future greener product, which is SF6 free, which would help India's ESG objectives as well as we go forward. So I'll go to the next slide, which is page number 6, talking a little bit about our wins and how they tie up with our strategic priorities. So here is a win in a cement firm, which is a pretty large cement firm. And here we were able to leverage our traditional products, which is our medium voltage switchgears and transformers, along with the ETAP SCADA. ETAP is now a Schneider company, which belongs in the Schneider portfolio, and we were able to kind of leverage both these competencies to be able to serve this customer in a very positive way. So this should also be potential enough to bring lifecycle revenues as we go forward. If we go to the next slide, page number 7, this is how we are leveraging our installed base. This is one of a prestigious project which was deployed with Schneider voltage products supplied from our France facility. The customer came back to us for retrofitting these electrical equipment as they have aged, and we won a pretty large order of large magnitude with this customer, and this helps us kind of tie in with our strategy to leverage our installed base for a life cycle of revenues. Going on to the next slide, which is page number 8, we are also increasing coverage with our customers along with partners. One of the key distribution entities in south of India has placed a very large order with Schneider and one of its partners to supply connected products and to digitize its entire network. So 80% of this install base is connected with SCADA and digitally enabled products. This should also be hopefully a win which will take us towards our digitalization and engaging with the customer for a very long period of time through uninterrupted power supply and leveraging the installed base. Let me go on to slide number 9 and give you a little flavor about how we are doing with our partner network. So if you see across the board, how we are doing business with our partners is continuously growing. It's growing at a pace faster than the organization. Some are doing a little bit, there's a little bit of lag, but we are doing our efforts to catch up, and this is a very strong initiative. You can see that the breaker business through panel builders, that's growing around 30%. The circuit breakers through licensed partners, that's also growing very well. The tank, which we are trying to sell through our licensee partners for the secondary GIS, that has also shown a very good offtake as we are continuously working on various approvals with the government agencies to make sure that our partners are able to participate at a level playing field in all that are opening up for secondary distribution as well. So I think this is how we are executing on our priorities. I'll take you to the next slide, which is page number 10. So we have spoken about in the past, we have a set of strategic priorities and we have certain financial priorities. The key thing that I'd like to give a message to all of you is that we are working in a very disciplined manner. Disciplined execution of the entire cycle from order to cash is what we are focusing on. So we see good traction from the top line. As you can see, the lead indicators of orders, which is up 44%, sales are up 18%, profitability is up, and also we have improved significantly on cash, which I think Mayank will take you through more as we go through the slides on the financials. So the average receivables in the market that we have with customers, that has gone down by 16 days, traction overall on inventory as well, and all this with good customer satisfaction. Customer satisfaction is the cornerstone of our strategy. We must remember that we live in very turbulent times where we have shortages. Despite all these issues, we have stayed very close to customers, finding them alternate makes, alternate approvals to be able to service them better. We have sacrificed at times on profitability to ensure that customer commitments are maintained, and we are able to supply them even if we need to air freight certain components or we have to go for alternate makes that are more expensive, but we have continued our focus on customers through these turbulent times. I'm sure this focus will pay us dividends as we go forward and the situation in the market normalizes as well. With this, I hand over to Mayank Holani, who is the CFO of the organization, to talk about the financials and all. Over to you, Mayank.
Thanks, Sanjay, and good afternoon, ladies and gentlemen. So you please refer to slide 12 on orders. So the markets are now looking quite strong and recovering, and our OG orders intake for the quarter stood at 5,040 million INR, which is a growth of 46% from last year's same quarter. And if we look at the trend from over last financial year, this is the fourth successive quarter where we have strong order growth in the succession, right? So which shows the good momentum in orders. And this has come from almost all the segments, so there is not a single segment where there has been a drop. If you look at the full year numbers, our orders for the year stood at 13,938 million INR, and again these are all outside group orders, so close to 1,400 crores with a growth of about 44% versus previous year. And in the last quarter, if you look at the major customers from where we had orders were like GE T&D, Bhutan Engineering, Mazagon Dock, Linxon, Tata Projects, etc. in this last year. As a result of this good order growth, our backlog at the end of March 22 or at the end of financial year has increased by about 24% versus same period last year. So which shows a good pipeline for sales in the next year. Next slide, please. So on sales, sales for the quarter is 3,400 million INR, which is about 37.6% higher than same quarter in previous year. Sales for full year stood at 15,303 million, which is a growth of about 18% versus previous financial year. And this is the first time, in a way, it's a kind of record sales for the entity. So this is the first time we have crossed 1,500 crores landmark in this entity. And this sales has been helped by liquidation of finished goods, where there were some issues with customers due to site readiness or the liquidity issues. We have been able to solve it, and that has helped us in maximizing the revenue. And the major customers have been Bhutan Engineering, BSES, GET&D, Torrent Power, Humboldt, etc. And I mean the list is quite long. In terms of order and sales, another factor which I would like to re-emphasize, and we have been stating in every quarterly call, that we continue to be cautious on order booking or even on sales in terms of cash security and margin. So our first and foremost priority is to ensure that we don't lose on the recovering the sales in terms of cash. So that remains the top priority. Now moving on to next slide, slide 14, please. So our overall P&L, if you see, it is aligned with our strategy. We are focused on cash and margins, and we'll continue this journey. Now, gross margin for the quarter is about 29.2%, which is minus 6.4 points versus last year. So last year, as you can see, there was a big value in other income, which was coming due to some of the recoveries from the old provisioned debt. So which is not the same. There was some insurance claim also for previous period, but without that also there is an impact on margin, which has been due to the raw material inflation, which partly we have been able to pass on to customers, but since this is a long cycle business, the impact remains. Employee cost is and other expenses are in line with the numbers. So you will see that at EBITDA level, we have a growth of about 3.4 points versus previous year, and EBIT is about 4.3 points higher than previous year. Now, and all this has resulted in a net profit of about 1 million versus loss of 113 million in previous year. So which is a delta of 4.6 points. And this the raw material inflation impact, whatever has been coming, we have been able to, while partly we have passed on to customers, and then due to the other actions on our overall structural costs and all, we have been able to mitigate that and improve profitability. While hedging has also helped a bit. Next slide, please. Now moving on to the full year P&L, you will see the sales growth is about 18%. That is, the gross margin is again 2.3 points lower than this, and the material cost impact has been about 1.6 points, which is the material cost as a percentage of sales, and remaining is the other income, similar to what you saw in the last quarter, this quarter's explanation. EBITDA level, we are at almost same level as previous year for full year, and at EBIT, it's an improvement of 0.5 points, which is the depreciation has reduced. Now, profit after tax, we are at 276 million for the year against 10 million loss in previous year. And you will see that this is the first year after a gap of 10 years. So in 2011-12, we had profit, and since then we have been, last year we were at a marginal just 10 million loss. After 10 years, we have a profitable P&L, and that's a very good thing to have. And we'll continue this journey. Okay, so I'll leave at this and open the floor for Q&A. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Hello. Hello. Hello.
Yeah, hello.
Hello.
Mr. Mithani, you can ask your question.
Hello. Hello.
We can hear
Hello.
you. We can hear you.
Yeah, you can hear me. My question is related to this transformer segment. Are we doing good in segment also? I hear the industry is reviving. So that is question number 1. Question number 2 is every year we have some exceptional item of restructuring. That has been happening since last 5 years. So how many years of restructuring, sir? That's the second question. That's it.
So I would say that the transformer segment is doing pretty well. You are right. The order growth in transformer segment is slightly above the overall order growth that we have seen, the numbers which Mayank shared on terms of the orders.
Mm-hmm.
In terms of restructuring, I would say that restructuring is an investment for the future. So in line with the transforming market and the transforming skill sets that are required in the organization, we do invest in restructuring to make sure that we build a stronger company going forward.
No, I understand that, but we have been doing it since last 5 to 6 years. So, can you just guide through that what has changed now because of every year there is one of the exceptional items. So sometimes don't understand what are we doing with it. Like, are we going have some predefined path for it, or how does it work? So. Hello.
So I think what happens in an organization is that you have a certain skill set which you need to invest in, and you have a certain skill set or certain areas that have become redundant as a period of time. So the idea is to be able to restructure the ones that do not make sense for the future and to invest in areas which are making sense for the future. So we're doing both at the same time to build a more sustainable organization.
And sir, our employee cost, despite doing so much restructuring, has been constantly going up. So is it that because the business is growing, we are hiring more, and there is some balancing happening there?
So, Mr. Viraj, the reason for employee cost going up in this financial year, if you look, is tactical actions taken in previous year when the COVID came in, right? So there were salary cuts, and some of the benefits were cut down for employees, so which have come back. So that's why you see a more than normal employee cost increase.
Okay, sir. I shall join you for the question. Thank you, sir. Thank you.
Sure. Thank you.
Thank you. Our next question comes from the line of Nikhil Jain with Galaxy International. Please go ahead.
Yeah, thank you for giving the opportunity. Just 2 questions. One, I just wanted to understand, let's say Schneider has many entities. Hello?
Your voice is not clear. Sorry.
We can hear you.
There is a lot of disturbance. Your voice is not clear.
Okay. Are you able to hear me now?
Not really. Maybe, I don't know if you are outside or somewhere. There is a lot of background noise coming.
Okay. Hello? Is it better?
Yeah, please go ahead and ask a question. We'll try our level best to.
Yeah. Okay. No, what I actually wanted to understand was that Schneider has so many entities in India, and some of them are fully owned subsidiary, and while this is ours is the only listed entity in India. So I just wanted to understand what's the kind of breakup that we have between the work that we do and what they do, and is there, let's say, some kind of clarity that is there for everybody that, okay, this is only the path that we will be taking, and is that path good enough and big enough for us to actually grow and continue to do well?
So I think to answer your question, I would say that Schneider has many entities in India, primarily because Schneider has different product lines in India. So if we look at this particular business, which we are into, we are primarily the flag bearers for the medium voltage technology in India. And I would say that as far as medium voltage technology and its products and its revenue is concerned, I wouldn't say that there is a significant overlap with other entities. It was actually zero. There might be some things which have been did through recent acquisitions, and the company is working on a strategy to address that as well.
So would we be the only company who is actually handling this medium voltage business, or do you anticipate that there is still, let's say, possibilities of other entities also handling?
So I would say that these matters are under discussion right now, and to be rest assured, we are very clear that we do not want to create competing entities within the Schneider Group. That does not work well for any one of us, right? So that is not the purpose behind doing it.
Right. Okay. So thank you for that. My second question is with respect to the smart meters. So I understand that you are the entity who is actually working on the smart meters and supporting the industry for smart meter. So can you give some lowdown or some views on how the industry is doing and what is our strategy for smart meter implementation, given it's a big opportunity?
So if you see, the manufacturing and marketing of smart meters does not reside within this entity.
Okay.
So this entity is not responsible to make those meters or to market those meters. What it represents as an opportunity is for us to digitize the network, right? Because smart meters is an end result of you digitizing the entire network. So this entity has the capability to do projects which can digitize the network. That is what represents an opportunity for this particular entity. And also we need to be very selective about it, because this is an activity that could burn a lot of cash if not managed very clearly, because these projects tend to run over 5 to 6 years of time. So selectivity in projects, being able to supply digitally enabled products on the medium voltage side, and to be able to integrate them to SCADA and be able to leverage multi-year of services revenue, that's the focus that we will be having with this particular entity. The manufacturing of meters and its sales is not the primary objective of this entity.
Okay. So in your current order book, so is there any business that you have from the smart meter, or let's say the digitization of the smart meter and the entire grid network kind of a thing?
Yes, there is a mix, but there are no meters in this particular thing right now.
Sure. So that resides with another Schneider entity, right?
Yeah, because the decision making, if you see in the market, is agnostic. People buy meters separately and people buy the integration separately.
Fair enough. Thank you. That's all from my side. Yeah.
Thank you. Ladies and gentlemen, if you would like to ask a question, please press star 1. Our next question comes from the line of Aditya Soni, an investor. Please go ahead.
Yeah, hi. Good afternoon. So my question is the growth which we have seen over the last year, right? So that is because of the increase in the price or increase in the volume?
It's a combination of both. If you see the lead indicators, which is the order booking, you would see a fairly equal distribution between pricing and volume growth.
Okay.
As far as sales is concerned, I think sales does have a lag impact. So you would say that the composition would again be slightly tilted more towards pricing than towards volume.
But then the delta C, which we have seen, like, because of the cost, the margins of, the last quarter has been impacted, so that we are not able to recover. So are we planning to have a further price increase also?
You see, we are increasing price as far as possible in line with the commodity increases. But the fact of the matter is that we have a certain duration of the contract validity. In that period, there is not much possibility to take up pricing further up. So, and the market has been very volatile. For example, there could be a situation where we take an order today and we execute it, say, next month. And you could still have inflationary pressures happening because of the unnatural circumstances around the globe. So it's a catch-up which has become very, very steep, even in very short periods. So you can imagine the complexity of managing projects in such an environment.
I totally understand, but since due to the supply chain issues, the lead time of the products have been increased, right? So, and due to this volatility, probably you may book the order in this month and you may be able to deliver up to 6 months. Then in between, if the prices increase, then your margins may drop, right? Then how do you address this?
Correct. So we try to build safeguards, we try to build contingency, but unfortunately we are also in a competitive environment. So the fact of the matter is that, and the situation is not completely predictable. We thought that we understood the impact of COVID on supply chain, and then the war happened. So there are certain things that fell off the cliff post the war situation as well. So it's been a kind of a challenging times if you look at it from that perspective to exactly predict how commodities would behave.
Understood.
Okay, thank you.
Yeah, thank you.
Ladies and gentlemen, if you would like to ask a question, please press star 1 on your telephone keypads. Our next question comes from the line of Anurag Patil with Roha Asset Managers. Please go ahead.
Thank you for the opportunity. So, sir, for FY23 and next couple of years, how do you see the revenue growth and order booking momentum going ahead?
See, we normally we don't provide any guidance for subsequent period as a practice. But you can, you see the backlog which we have and the order growth, the way trend is. But we don't provide any guidance.
Okay, sir. But directionally, you see the positive momentum in revenue and order booking. That can we assume?
That's a matter of fact. It's available on recording.
Yeah. Okay. And sir, one accounting question. Out of 152 crore other expenses for FY22, how much would be the fixed cost as a percentage? Just approx number will be fine.
Please pardon?
Sir, in FY22, our other expenses stood around 152 crore. So out of that 152 crore, how much would be variable cost and how much would be fixed? Very approx number is fine.
Approximately 50% is fixed and 50% is variable.
Okay, sir. Okay, sir. Thank you very much. That's it from us.
Thank you. Our next question comes from the line of Nesar Parekh with Native Capital. Please go ahead.
Hi, thank you for the opportunity. My question is, can you just give some broad split for the top products which contribute to the maximum revenue?
You are talking about product or the business mix that we usually disclose?
Business mix also works, but within that, if you can talk a bit about in each segment, a top product, that would also help.
Pardon, I'm not. Your voice is not clear.
No, I'm saying if you can give the business mix, but also along with that, just talk a bit about the top product within each business segment, that would help.
Okay. So we are not reporting any in the product segment. So the business mix that we are disclosing.
Yeah. So you want for full year, right?
Yes.
Yeah. So systems is about 72%, transactions 17%, services 11%.
And when you say systems, can you just talk like which are the top, what products or projects kind of contribute the maximum to this, so that we just get a sense of
the definition of these three is available on the website and on the presentations business. So we have captured all the details about what are the products are available on each of these categories.
See, as you can see, the mix also major part of our business falls under systems because we are into a largely ETO business.
Right. Sure. And separately, in India, how much business does Schneider do, outside of this entity as well? We're just trying to understand, from Schneider perspective, how critical is this entity?
See, we can't comment about the other entities. Yeah.
Okay. Okay. Sure. Thank you.
Thank you.
Thank you. Our next question comes from the line of Rupesh Tatia with IntelSense Capital. Please go ahead.
Hello, sir. Can you hear me?
Yes.
Okay. So last quarter, I think you had talked about two substantial wins in data centers. So if you can, just talk a little bit about that, where are we, and any other wins in Q4, and how is this business progressing from, let's say, FY23 and FY24?
So I would say that the traction in terms of, we spoke about the opportunities and we spoke about the traction that we are making with customers. I think the traction continues. We are not at privileged to disclose the names of the customers and the values because of non-disclosures which we have with those customers. But one thing we can say that the mix is steadily improving in terms of the data center mix.
Okay. So sir, can you give some sense of opportunity size in data center?
I think this is something that is pretty difficult to calculate in terms of what could be the potential in terms of, because data centers are evolving market and evolving business. So I would say that it is a little bit too premature to put a number on it as to what could be a steady state business of data centers. And right now it's at a stage where it's just about to grow. So it's growing at a very double-digit pace. But what could be a steady state business is something that is a little bit difficult to put a number on it. Can we have the next question, please?
Yes, sir. Our next question comes from the line of Dheeraj Sachdev with Roha Asset Management. Please go ahead, sir.
Since you are involved in large projects and part of the projects, I guess, is tender business. So are you able to, or will you be able to pass on the higher costs, variable costs, etc., to the end client? Because sometimes what happens is the project business is fixed costs in nature or fixed pricing in nature and completely doesn't cover the price variation clause. So can you give some qualitative color that you'll be able to maintain the margin in this kind of higher raw material cost situation?
So you could see from our past track record that we have been able to kind of mitigate the risk on commodities to a very large extent, or else the impact to the gross margin would have been much more significant. So there are price variation clauses in some of our contracts. Some of our contracts are fixed period contracts in which you cannot pass on the commodity prices to the end customer. But the way we look at it is when we pick up projects, we also look at a kind of duration that we are agreeing to and build some contingency onto it in terms of what could be the inflationary trend in the period going forward. It's not, as we have seen, the circumstances have been a little volatile, and that predictability has not been accurate to a kind of 100%, but we are pretty close. So I think that what could happen in the future is something that we cannot predict. We try our best to use our judgment in terms of what we need to bake in as far as contingencies are concerned, but it's not something that is entirely predictable.
Yeah, so we assume that in the current order book, you must have built sufficient contingencies to take care of, raw material cost pressures, and you should be able to maintain the margins, right?
That is the intent. That is the intent, I would say.
Okay. On the other side, I've also looked, we have also looked at your cash flows, which have improved materially because of better working capital management. Now, when you have to execute these incremental order book, will you be able to generate a similar kind of cash flows of over 100 crores? Is the payment terms and inventory, etc., will be able to manage on a similar basis at a higher revenue level?
So, our cash flow is a mix of kind of, there are two factors. One is in previous year, because of your, COVID situation, the payments and liquidity issues were there, so your payments were getting delayed. So one is that. And second is also the impact of our, focus on cash and securing the payments, where we have been continuously focusing on improving the payment terms, right? So both put together have shown the result, and we continue to make effort in that direction.
So for
my own sentiment that we focused on disciplined execution. We do not change our strategy on that particular front. And one of the key parameters is to make sure that we do good on cash.
That's very nice to hear. So I think, so incrementally, if you want to grow at, say, 15-20%, I'm just giving you a hypothetical number, you'll be able to manage with cash flows without resorting to any working capital borrowings or incremental loans per se, right?
We would not like to comment on, any future guidance. Sorry.
No, it's not a future guidance. It's based on the current tightening of working capital that you have resorted to. You should be able to manage comfortably the incremental order book execution cycle through the internal cash flow that you are generating, right?
Yeah. Sorry. Can you repeat what you said?
I just said that based on your working capital tightening norms, payment terms, etc., going forward with these incremental order book that you have or growth that you will have to incur, you should be able to manage through your internal cash generation without resorting to any incremental working capital borrowing.
See, that's what we can, we may also expect, but sometimes there are short cycle impacts also, right? So it's difficult to predict exactly, but and as a normal scenario, we would also like to have that kind of thing.
Okay, thank you so much. All the best.
Thank you. Our next question comes from the line of Harshal Parekh with AlfAccurate Advisors Private Limited. Please go ahead.
Thanks for the opportunity, sir. My question is on the medium voltage industry side. So I would like to know what would be our market share. So are we market leaders into the medium voltage segment? And what would be our competitive positioning in the industry in terms of our products?
See, normally we do not comment on market shares, whether we are number one or we're number two or number three. But what I could tell you is that in the addressable market, we are pretty decently poised. So I wouldn't want to put a number to it because the definition of market and market share is different for different people. But as far as the addressable portion of the medium voltage market is concerned, we are pretty decently poised. And we have a twin agenda. We are not just chasing market share. We are also chasing the right market share for profitability reasons. So one of the reasons that we want to target is partnerization and digitization is to ensure that we have the right market share with the right set of customers.
Understood, sir. So, and in terms of the addressable market which you mentioned, so is there any particular section of the market which we are not specifically catering to in medium voltage?
There is a large amount of market which is best addressed by partners. So the pull-through that you get here is for your breaker and not your full equipment. So we have been kind of divesting a little bit of top line continuously to make sure that we participate more and more in the right markets on a complete project basis and address the markets which are at the bottom of the pyramid through our partners.
Okay. And sir, in terms of technology, if we compare with our peers like ABB and Siemens, so are we technologically superior?
Yes, we are. We are, let me put it this way, in places we are superior and in most places we are equivalent. So I think it's a good position to be in.
Okay, sir. Okay. And sir, my other question is on the other expenses side. So if we see FY21 and FY22, the other expenses have remained flat in absolute terms. That is 152 crores, despite our revenue increasing by 18%. So, is this because of any cost-saving initiatives, etc.? And is this sustainable?
So see, the impact in other income, other expenses is because, last year we had some major good amount of provisioning also for the old debtors, right? So which has gone out, and then some of the variable costs like repair, maintenance, fuel, etc. have gone up. So that's kind of balanced. So otherwise, obviously, if your revenue, your fixed costs remain same and there is no abnormal impact, slightly the other expenses will go up. But last year there was an exception or you can say the one-off that debtors provision. So there was a debtors provision, and what happens by way of accounting, debtors provision come in other expenses, while if there is a recovery, it goes into other income. So you have a recovery also coming as other income from return of debtors, and you have head provision below. So if you net it off, that was the reason.
Understood, sir. Understood, sir. And so just last question, what would be our closing order book?
You mean the backlog at the end of March, right?
Yes.
So our backlog at the end of March 22 is 933 crores versus 750 crores in March 21.
750 crores in March 21. Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, please restrict your question to one question and one follow-up. Our next question comes from the line of Viraj Mithani with Jupiter Financial. Please go ahead.
Hello.
Yes, Mr. Mithani, you could go ahead.
Yes, sir. I was looking at your numbers. What is this the benefit of which is there in the lower line, that remeasurement of defined plan and benefit plan, some 2 crores and fair value of the cash flow? This is our hedging income, is it?
Yeah. So there are two things in that. One is this gratuity and gratuity benefit revaluation, which is to be done actuarial basis, right? That comes here below the profit, and then because we last year in I think Q2 we started the hedging process, so that hedging benefit also as on date based on whatever hedging we have done, and the impact, which is notional impact as on date, has to be provided as per accounting guidelines.
Yeah. Secondly, this cash flow from the operating activities has actually gone up smartly. So is it because we are receiving orders, advance cash, and because of for the orders booked?
More because of the last year. One is obviously your profit has gone up, but also last year, if you see, our days sales outstanding was much more, right? So that we have, and the market situation was a bit different, and this year the sentiment has improved, so that has helped. And we were able to collect more than, from the previous year, and this year's outstanding, which remains at the end of year, was much lower than the last year in terms of, the percentage, if you say.
Okay, and what is our outstanding order book right now, and what is our capacity utilization? And can you give the breakup for the order book?
Second part, what you said, other than the outstanding order book?
Capacity utilization and breakup of order book.
So, breakup of order book is about, the 933 crore is our backlog.
933 crores.
Yeah.
And that will be broken up into like systems, transactions, and IG?
69% is systems.
Okay.
And transaction 18%, services 13%.
Transaction 18 and services 13.
Yeah.
And would it be intergroup orders?
Intergroup order for the year, right?
Yeah.
The intergroup order for the year is about, just a minute. It's about 319 crores.
319 crores. Out of this 933 crore order, is it? This is part of that order book, or this is already executed orders?
No, that is only the outside group. 933 crore backlog is the outside group. Intergroup is separate.
What is intergroup? That's what I wanted to know.
As such, we are not reporting on the backlog side because it's a very short-term order. So we are taking the order and we are executing.
Intergroup is not a long cycle, so we don't report that separate.
No. What is the intergroup order in this 933 crores order book? That's what my question was.
933 is with only outside group.
It's outside group. Okay.
Yes.
And is there an intergroup order book also in this, apart from this?
No, intergroup is over and above this, but we don't report it because the cycle is anyway short.
All right. Okay. That's it from us. And all the best.
Thank you.
Ladies and gentlemen, a reminder, please restrict your questions to 2 questions per participant. Our next question comes from the line of Rupesh Tatia with IntelSense Capital. Please go ahead.
Hello, sir. My first question is a clarification. On page 10 of your presentation, there is one order progress. It says 1394 crore, and you are saying order book is 933 crore. So what is this order progress then? Hello.
Sorry, you see, 1393 crores is the order booking during the year, right? And 933 crore is the backlog orders in hand, which are to be executed in future period as on March 22.
I see. Okay. And sir, in last year's revenue, what would be the percentage of business from utilities?
So see, typically our business from utilities is about in the range of 40 to 45%.
And would it be fair to assume, sir, it is more margin business than rest of the segments?
Pardon, can you repeat?
Would it be fair to assume that this is lower margin than rest of the business?
No. In that way, you can't assume that utilities is more margin.
Okay. Understood, sir. Okay, those are my questions. Thank you.
Thank you. Our next question comes from the line of Nikhil Jain with Galaxy International. Please go ahead.
Yeah, thank you for the opportunity again. Are you able to hear me, sir?
Yes.
Yeah, I just wanted to know whether you do any exports. And if you do any exports, then what may be the percentage of exports in the current quarter and for the year?
We do have exports. So the export sales during
Sorry, for the year, sir, how much was it?
I said export sales in the last quarter was 328 million INR.
Right. Right. And for the year?
1,459 million INR. So 145.9 crore.
And this is basically supplied to group companies across the globe, or is it to other external parties, sir?
One can be to the group companies, but also there are many exports where you have, say, Indian EPCs executing a project in Africa or, Middle East or somewhere. So those are also coming as export, where you are exporting out of India. Maybe the customer may have some connection with India, but you are exporting. So the business is coming directly from here, not through group companies, but there is an export. Even like Bangladesh, also we have a lot of business.
Right. So is there any special focus towards export that you want to grow exports higher than our domestic revenue growth, or any let's say a mandate from the group companies or the parent company that they will be taking some material from us? Is there anything any movement in that direction, sir?
No, there is no such mandate that to grow or to grow exports. So.
Okay. Okay, fair enough, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for the day. I now hand over the conference to Mr. Harshit Kapadia for closing comments.
Yeah, we would like to thank the management of Schneider Electric Infrastructure for giving us an opportunity to host this call. We also would like to thank all investors and analysts for joining for this call. Any closing remarks, Sanjay sir, that you would want to give to investors?
I would like to thank you and all the participants for joining the call today evening and asking questions. So I look forward to talking to you next time. Thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference call. Thank you for joining us. You may now disconnect your lines.